Hi guys, welcome back. It's LSP. It's currently the 19th of May 2020. If you like the content that I post, guys, and you're getting value from it, please give it a thumbs up. Please share the videos and please subscribe to the channel. So I'm going to be going through about 8 charts or so. They're all marked up differently, and I'm just going to whiz through them all. I want to keep these videos under 10 minutes. Yeah, going forward. I don't want long videos because people just aren't watching them, and I'm not getting my message across. But before I continue, just have in mind the one common denominator, yeah, in everything that I talk about. The trader is it, period. The trader is responsible for making or breaking a system. The trader is responsible for everything that happens in their trading, period. There's no deviation on this. And the other thing that I like to press, and push as much as I can is live trading. And I'm not talking about live funds. I'm just talking about watching price live, being in trades while they are moving. Yeah, hindsight studies are great. They absolutely have value, but experience. You will not gain experience by looking at a hindsight chart or a hindsight setup or a hindsight trade. It's just not going to happen, because when you're in a trade, you respond physiologically. Your body responds, your mind responds, everything in your body responds to the trade that you're in, and those experiences you cannot experience unless you're in a trade. Yeah, so I'm a massive advocate of getting yourself into live moving trades. Yeah, and again, just to really emphasize, I'm not talking about using live money. Do it on a demo account, but you've got to be in a trade to feel it, to understand how it moves, to understand the mechanics, and to gain the experience to then have the confidence to either do or not do the next time you open a trade. Yeah. So we're looking at a blank chart here of the Euro USD. They're all pretty much the same, guys, from most platforms. There's slight variations, Sunday candles, no Sunday candles. There might be a wick out of place. It doesn't matter. We're all looking pretty much at the same stuff. So the first thing we're going to do is we're going to go over to the first chart, supply and demand. Okay, and this is very loose, guys. Yeah, I'm not an expert in all of these strategies. I'm not an expert, in everything that I'm going to talk about. I have my own system, my own methodology based on a lot of different ideas over the years from a lot of different people, plus my own studies. But so what I'm getting at is I don't want people to say, well, you've put everything in the wrong place. Don't worry about that. I just want to talk about the basics of each individual thing with the idea that the trader is responsible. So when we're looking at supply and demand like this, okay, price was down here at the time when I actually started these charts, and you can see we've had a nice run up on the euro. Everybody knows about this now, I'm sure. And then obviously we've had some continuation today, and it's hit this level here. And what we'll do now, we'll go ahead and we'll expand these boxes a little bit just to kind of get a better feel. And again, don't worry too much about this, this level of demand down here, taking out this level of supply here. And I'm not bothered about any of that stuff. I just want to illustrate something. Price has come all the way up here and it's hit this level. All right. And one might argue, okay, yep, that's fine. Price has come into this level, of supply, and I'm going to take a short, and then obviously you get a little bit of reward. Maybe you take the trade off. Great, done. Fantastic. Yeah, there's nothing wrong with that. Let's go over to trend lines. Yeah. Now, again, I'm not a trend line fan at all, guys. I don't draw lines like this on my charts, but I want to illustrate something. When people are looking at trend lines like this, maybe this is what they're looking at, and now that we're coming up into a trend line. Okay, and just go with me on this one, right? Coming up into this trend line, and maybe somebody takes a short here, they put their stop up here, maybe they get a little bit of reward, I don't know, whatever happens, they get stopped out, they don't get stopped out, but I'm talking about the actual trend lines, the trend lines itself, and they'll take a trade up here. Okay, price manipulation. Yeah, and I've made a note here of a stop run up here and a stop run down here. Okay, and this style of trading is very specific to lower time frames. Yeah, hourly, 15 minutes, sometimes the 5-minute, and it's a London session idea where you're looking for price manipulation on one side of the market or the other to take the opposite side of the trade. Yeah, you're looking for that moment in time when price tries to put traders on the wrong side of the market, then you jump in on the other side as price quickly comes back, yeah, and it becomes evident and obvious that it was nothing more than just manipulation and a stop run. Then you take the opposite, the opposite side of the trade or the opposite direction, and you get yourself a nice little, 10, 15, 20 pips, for example, right? And we go over to order block theory. Now, before I continue, okay, the reason I'm discussing order block theory, it's not mine, obviously, it's Michael Huddleston's, ICT. It's in the public domain. He's discussed it many, many times, and I don't have any ideas on this one way or the other. Yeah, my intention is not to bash on Michael or say anything about, you know, his concepts. It's nothing to do with that. But I'm putting it in here because I get a lot of emails, people asking me, do you use order blocks? Which one do you know? How do you spot them? It's not my concern. It's very difficult for me to say that I don't talk about Michael's material, and people believe me because you don't know me. I sit in front of a screen and I'm, you know, doing videos and recordings, you know, but I just don't talk about Michael at all. I've got no interest in anything that he's doing. Ever since I left the mentor, I didn't leave. He kicked me out of the mentorship, obviously, because he said I was teaching his material, which I proved I wasn't. But anyway, whatever. And I'm going on a little bit of a rant, but I want to just emphasize the backstory so there's no issues. But it's a popular theory. It's something that he's discussed for countless years, openly in a public forum, many times. So there's never going to be any issue with him saying you're not allowed to talk about this and start, you know, going off on one, which wouldn't bother me anyway, to be honest, because I can handle myself. But the point is, we're going to discuss order block theory. So you can see price came down here and it touched this order block down here. Okay, stayed here for a little while and had a really nice push away from this. It's touched this order block now and it's respected it and moved away. And then we've got some upper levels and some lower levels in terms of the order block theory. Now let's go over to support and resistance. And again, I know some people will say, what are you talking about? That's not support and resistance. I'm trying to keep things really basic. Okay, we have a level down here that was penetrated, price went up, created a high, penetrated that level, and now it's come down, it respected it, so support, and it's coming back up now to potential resistance. Okay, so maybe people might use this information, you know, in their trading, you know, and take trades based on this, you know, based on this idea. Then we have moving averages. Okay, really not a fan. Okay, I mean, moving averages are not going to help you in consolidation like this. They just simply won't. Okay, this is the 8 period, the 20 period, and the 200 period moving averages, which over the years, and when I say over the years, I'm talking back in the early 2000s, well, late 90s to early 2000s, I had, you know, moving averages on my chart. If you guys have watched my videos when I was trading QCOM way back when, that was the only thing that I used to have on my charts because I was moderating a room at the time, you know, for VCM, or Velez Capital Management, and they used to use the 8 period, 20 period, and the 200 moving average, you know, so I had that on my chart, but I've never used them. I just don't use them. I think they're very difficult, you know, to work with, and it's just not my cup of tea. I don't see how price coming to a line is, I don't. What it represents is something completely different. That's a different idea, but the actual lines themselves, they don't give you any information, right? And then we go to the last one, sentiment. Okay, this is just a simple RSI 14 period. And obviously the idea with this is price comes down into the 20 level, it's oversold, we've got a lot more buyers, you know, and if it comes up here to the 80 level plus, you know, it's overbought, and then obviously we start to apparently come back in, and you know, it's a sentiment idea. It's the sentiment that it's oversold or overbought, and then you act accordingly. So when we look at all of these ideas, okay, which one or which combination of these works? Well, they all do. And this is the point that I'm trying to make. It isn't the system. It's simply not the system. The only thing what I've just gone through, you can look at some and say, well, supply and demand, maybe there's a trade there. So there's a plus on that one, right? With the trend line idea, maybe there's a trade there. Okay, there's a plus on that one. We take a look at manipulation, okay, price manipulation. In this area right here, as price is coming up, okay, you drop to the lower time frame, you know, you look during the London session, and maybe, I'm not going to do it now, but maybe, in fact, you know what, screw it, let's do it. Let's look at the London session, and let's just zoom out a little bit here. Let's go over to the 30-minute, take the scroll off, just to kind of get a bit of an idea. So there's the price manipulation, and obviously price moved away from that level. And then we started last week, bit of up and down, everything else. And then today, let's say during the London session, and I can already see that they wouldn't have been, but the London session is basically around about here, give or take between 5 and sort of 9 o'clock-ish, just there. There's no manipulation for me there. For me, based on the trend and the way that everything was going on the euro, ripping up to the upside, I would have liked to have seen something, during London, nice rip up like this, so it opens, Asian session, comes into the London session as London opens, Frankfurt, and then the London, then boom to the upside, reversal, and then maybe take a trade down into this area here. Okay, that's what I'm talking about, price manipulation. But there isn't one, so it's a minus for this idea, so to speak. All right, let's take those off. Excuse me. And then we go over to order block theory. Price comes up into this order block. You say, okay, yep, maybe there's a trade there, so there's a plus on that one. So that's 3 out of 4 so far. We go over to support and resistance. Price is coming up into resistance, but it doesn't quite get there. So for now, it's a minus. Okay, so that's 3 for 2. Moving averages, there's absolutely nothing we can do with this. I'm sure we can all agree. It's just a patience game, obviously waiting for something to turn. It's a lagging indicator, so you would imagine that you end up in trades for a lot longer when you're using moving averages, but you have to sit through a lot of crap, right? And then sentiment, obviously we're in the middle of nowhere, so there's nothing that we can do with this. So with all of that said, we've got some pluses, we've got some minuses, but can we say that every one of these ideas, okay, is a tradable idea? The answer to that question is yes. Of course it is. So if they're all tradable ideas, if they're all valid ideas, if they can all be used effectively in the marketplace, which they have over the years, okay, then what's the problem? Yeah. Why do people find it so difficult to trade? Well, it's going back to what I was saying before. Obviously, I'm going to say the trader is responsible, absolutely. But it's the inability to gain experience, more importantly, in your trading by trading live, by experiencing these different ideas, these different concepts, these methodologies, and really trying to understand what's going on behind the methodology. Why is price doing what it's doing? Yeah. If we look at, and I'm going to have to bounce between the two, yeah, we'll use order block theory, we'll use supply and demand, and we will use the trend line, right? So let me just make sure I've got these right charts. Okay, so we've got supply and demand. Prices come up here. And so far we've had around about a 35 pip move. Now the 35 pip move is going to be constant throughout the 3 charts we're going to look at. So supply and demand, yeah, we can say there was a trade there. It doesn't matter how you get into it, it's irrelevant. Confirmation, break of a momentum trend line, it doesn't matter. There was a 35 pip move, yeah? So let's say we've got our traders, and a trader takes, based on his understanding or her understanding of supply and demand theory, a trade for 35 pips. Yep, awesome. Takes the trade off, nice 35 pips, done for the day. We go over to trend lines. Yeah, as price is coming up into this trend line, remember as well, obviously, we are going on the assumption that we take the trade exactly at the high and get out exactly 35 pips. Now, obviously, with trend lines, it's a little bit trickier because as it's approaching the trend line, yeah, some people might change the trend line to maybe something like, something like this, maybe to the bodies, or incorporate this one here and maybe have it like this. But regardless of whichever way you do it, the point is it's coming up into this trend line idea, and maybe you can capitalize on this and take 35 pips. Yeah, we're just going to go right out there and just say this person, whoever he is, she is, took 35 pips out of this. And then we go over to the order block theory, and we can say as price was coming up into this order block, okay, we ended up taking a trade, price reverses a little bit, we get 35 pips. So my question to you is, which one's right? Yeah. And this is why I hate systems. This is why I hate the idea, of I am better than you. That person's better than this person. His concepts are the best. His concepts are no good. Her concept is shit. That's why I hate all of that, because it's very open and obvious what I'm trying to get across. Of those 3 that I've just gone through, which one is right? You can argue that the trend line one is a little bit harder to get into, but maybe you refine the entry strategy, whatever. The point is the idea, the concept, the methodology of trend lines, the methodology of the order block, the methodology of supply and demand. Which one is right? Yeah? Because I can go through every single one of those and establish a correct entry point and show you how, and you can do the study yourself, just go to the lower time frames, you'll see it, how you could have capitalized on any one of these 3 strategies. Yeah. Now, again, We're not talking about consistently going forward and things like this. We're just talking about very basic stuff. We're talking about an idea here. Understanding that the trader is responsible for everything that happens in their trading. So again, I ask the question, which one is correct? The answer is, of course, they're all correct. You can make money on all three of those as long as you have correct risk management, as long as you understand what's going on in the marketplace and the underlying higher time frame analysis that you do. You have a very strong belief in whatever you believe moves the markets and that you're able to incorporate that into your trading. Okay, and you're able to do it in a disciplined way, consistently over time, gaining experience and having more confidence as you take trades going forward. Yeah, but again, they all work. Systems, methodologies, they're just systems and methodologies, guys. Some can be refined for more accuracy. Some can be flared up, like a magician, an illusion with a magic trick, and made to be something that they're not. Some can be, made or turned into complete trash with a little bit more study. They all have validity. Yeah, that's my point. That's what I'm trying to get at. They all have validity as long as you put the trader in the center and say you are responsible for everything that you do in your trading. The methodology is irrelevant as long as you're able, as a trader, to understand the holistic view of the market and incorporate that into your trading and use these concepts and ideas and methodologies, for what they are. Concepts, ideas, and methodologies. Yeah. The way of the trader, so to speak, if you want to go a little bit zen, is the trader. Yeah. So with all of that said, guys, I hope you enjoyed the video. Tried to keep it as short and brief as I could. I hope you find some value in what I'm trying to get across. And I'll leave it at that. I hope everybody's safe and well, and I will catch up with you guys in the next update. Take care.